All right, Asian markets were mixed. The Nikkei share average declined by 1.4%, while the Hang Seng Index rose marginally, up 0.14%. Chinese markets were closed on account of the Lunar New Year. All right, and so on the U.S. markets, U.S. stocks, particularly tech stocks, got hammered yesterday, with tech favorite NVIDIA losing close on 17% of its value at the close. That's somewhere in the order of about $580 billion that was wiped off its value. The declines were driven by increasing concerns over competition from a Chinese AI startup called DeepSeek. According to some financial media, DeepSeek's AI assistant surpassed ChatGPT as the top app on Apple's App Store, which has given investors the jitters about US firms' dominance in artificial intelligence, the sector that's been driving markets higher for the last couple of years. The Dow Jones Industrial Average rose by 0.65%. The S&P 500 declined by 1.46%, while the tech-heavy Nasdaq lost 0.5%. The local all-share index is up 0.1%, currently trading at 84,243 index points. The rand is trading at 18.66 against the US dollar, 19.47 vis-a-vis the euro, and 23.23 against the British pound. In terms of the commodities, we see gold is trading at $2,744 an ounce, platinum at $949 an ounce, while Brent crude oil is trading at $76.50 a barrel. To unpack what's been happening, I'm joined by Martin Smith. He's the portfolio manager at Anchor Capital. Thank you so much for joining us, Martin. So, we continue. So, of course, the big hoo-ha right now in the market is this issue of, the disruption in the AI market. Just in simple terms, explain to us what has happened and why we've seen such a massive hemorrhage on tech stocks.
Yeah, so I mean, we've got to remember a lot of these stocks were also the high flyers in both 2023 and 24. So come a huge way since then. So the likes of NVIDIA were down about 17%. But again, given the moves that we've seen in the last 2 years, it's just off a little bit. But in essence, what's happened specifically in the chip making part of the market is it seems that we found a way to deliver AI in a more efficient manner, which obviously means you need less computing power, which means less chips for the likes of NVIDIA and the like to sell to the clients. So it's kind of causing a bit of a disruption there. So you've seen those shares specifically come off, a little bit of filtering into the rest of the market because you've got, again, valuations a little bit stretched and maybe sentiment a little bit negatively affected. But a lot of, again, the high flyers like NVIDIA and the chip makers were pricing in the sales of AI chips and the like, kind of continuing at the current run rate because of what's needed currently, or what we thought was currently, to kind of develop AI and roll out AI. But now with this new technology that's come out, I think the market's looking to it being a little bit more efficient and costing a lot less. So that's why you've seen a little bit of a sell-off in the market.
What is your view around the extent to which funds like pension funds have invested in this space? Because it's been a hoo-ha for quite some time. People have been getting excited about the ever-extending valuations, and now there are these massive losses. And of course, there's going to be very limited confidence about ploughing back into these particular stocks because the future is not so bright. So, I mean, do you think a lot of people's money, people that need to rely on things like their pensions, will have been affected?
So look, I think when it comes to pension funds and share portfolios and the like, often the portfolio manager or the wealth manager or the fund manager will have a very diversified outlook on the market. So you won't be 100% into a company like NVIDIA. You'll maybe have a very small holding in NVIDIA or via an index, and the rest will be in things like bonds and other shares and maybe things that aren't exposed to the rand and some things that are. So if you're well diversified, I think the impact on your investment isn't as significant as it is in the underlying share itself. Also, insofar as the future of it, a lot of it also remains uncertain. So sometimes the market sells now and then analyzes, and I think that's what we saw last night. And the market is also pre-market. The share is up a couple % already. So I think a lot of it's still a little bit unknown. and we'll see how things pivot and how we go from here. But I think it does also just show that you need to be cautious around valuation, and you also need to be cautious around overexposing yourself to a specific stock or a specific sector. But insofar as people's overall wealth is concerned, I think you'd be mostly sheltered, given that you should have a kind of well-diversified set of investments.
Yeah. Martin, it seems as though Donald Trump's policies are becoming a bit clearer when it comes to tariffs. He's talking about levying tariffs against the likes of semiconductor producers, metal producers, pharmaceuticals, and so on, which really shows that he's really putting US companies in those particular sectors first. But what are the implications, even though he hasn't talked about the quantum yet? What are the implications of this for other economies, small little economies like South Africa?
So I think the thing with Donald Trump, specifically around things like tariffs, is they're not as bad as he initially kind of threatened. And that was also very similar to his first term in power, where often kind of the end result of something was not as bad as what he initially put out there. And I think he's not afraid to use tariffs as a bit of a threat when it comes to negotiations and things like that. So that's something to keep an eye for. But insofar as what we've seen at the moment, you are right. It is definitely kind of pro the US and pro a stronger dollar and potentially inflationary. And you've seen the market actually bake a lot of that into what the dollar has done and what views around inflation have done in the last a few months, because the market's anticipating that he was going to kind of go in that direction. So a lot of that's probably in the price already insofar as where the dollar is and where yields are in the States. So it's an interesting one to kind of keep an eye out for. And I think, like you mentioned, we don't know the quantum yet, but like I mentioned at the beginning, Donald Trump often starts out quite scary insofar as the threats that he puts out there versus what the end outcome is. But yeah, a little bit of a wait and see at the moment.
All right, Martin, we're going to leave it there. Thank you very much for your insights. That was Martin Smith. He's a portfolio manager at Anchor Capital.